Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh man, that went through way faster than I thought. I was still rubbing my eyes. The allergies this week are just been so bad. Okay, guys, we have a big day ahead of us. Just real quick, we do have some sorry, we don't have news here coming up yet. We don't have it at the bottom of the hour, but we did have US ADP employment change, which was significantly higher than expected. 296K versus 147.5K. My gosh. Dude, these economic numbers are just so crazy all over the place. That said, the treasuries didn't actually react that strongly to it. They certainly reacted stronger from yesterday's news, but I think that was because there was already stuff going on with regional banks. But we'll talk about that in a second. Okay, let's just come down, take inventory of things. Really aggressive move yesterday. They have extended a little bit in the overnight in the treasuries. Equities, similarly, a huge down move. So this was what we would call a risk off flow. Equities down, treasuries up. They did bounce a little bit at the end of the day. The regional banks still stayed down though. Okay, I think that's something important to note. Oil, man. Oil kind of suggesting that things don't look good. Oil getting crushed yesterday, and I mean, man, look at this move. Whew. From 76 almost $4, and now we're getting another $2 in the overnight, something like that. These are big moves in oil. Okay, that really suggests some scary things about the prospects for the economy and soft lending and all that. Okay, gold and silver, meanwhile, up. They're not as high as they were, 2 days ago, but it did help gold and silver. And then you got Kappa. Kappa's still kind of going sideways. Bitcoin has been fighting around, but it's still kind of in the middle there. And the dollar still kind of languishing a little bit at 101.3. So the big question is, what was the driver of the flows that we had yesterday? It's kind of funny. I've seen a lot of different ideas out there. We was having a discussion on Discord because one regular was thinking that it was because they expected the Federal Reserve to be hawkish, which to me is just like, no, because when the Fed is hawkish, the treasuries sell, they don't buy. Is it fair to say that a good rule of thumb is that when it's the Fed moving the markets, then we tend to see equities and treasuries move correlated to each other? And when it's the markets moving or anticipating a change in the Fed because of changes in economic conditions, we tend to see opposite correlations, is maybe how I would approach it. But okay, so wait, did we have news at 6:30 that I missed? It's not on my deck. Hold on. What was that? It gonna be one of them days, huh? Oh, you know what? We did have some news. It was not listed on my. It was not listed on any of my calendars, but that we just got the refunding amounts about how much the treasury is to sell and so forth. That's what that was. Okay. It's all okay. It's okay. Calm down. Read this. We can move past that. We didn't miss anything. We're okay. Okay. U.S. Treasury keeps refunding auctions identical to prior quarter instead of bringing it down, and that's why we're moving up. Okay, so anyways, now we can talk about yesterday's flows. So we can have a couple of different theories. Okay, one of them was there was like some inventory news and stuff around that time. I think that we actually started to see some volatility in the treasuries before that news release and like light liquidity because of it. So I'm gonna put that one down at the bottom of the list. It's a possibility, but I don't think it was largely about factory orders. Sorry, inventory levels. That was like way too outsized of a move over that sort of a thing. Okay, so then your next theory is that we did have banks were getting crushed. So the explanation that I've seen, Charlie Gasparino has been reporting that analysts and banks are revaluing regional banks based on what happened with First Republic, and basically saying that these assets that the regional banks hold are worth 85 cents to $1, and that's why you were suddenly seeing all of these regional bank stocks just get absolutely trashed yesterday. Okay, and when we started to see those fall, we started to see flows coming into the treasury. So I think that's the most likely explanation for what was going on. But another reasonable explanation would be that it was moves in preparation for the Federal Reserve meeting. And of course, the Federal Reserve meeting, it probably does play a part in here. I personally don't expect the Federal Reserve to do anything all that special today. You know, they've been very hesitant to change or do anything significant in the statement, and Powell avoids trying to create any kind of a stir in the actual like press conference. And I think that he's probably going to continue to do that. He's going to say, well, this is exactly what we've been telling you for 6 months, is that we're going to hike until May, and then there's probably going to be a pause. And so yeah, now there's probably going to be a pause, but we don't actually 100% know what's going to happen in June. We'll look at the data and it will be data dependent. That's I think what he's going to say. So I'm not expecting too big of fireworks, but the market will probably still move regardless of what he says. Even if it's not very significant, there will probably be some movement in the markets, and I would guess that it probably be tilted towards the upside, that both treasuries and equities could rise based on what the Fed says today. Okay, but I'm not really convinced, because again, if it was the Federal Reserve was going to be dovish tomorrow, why would equities sell? Right? That explains why treasuries are up, but it doesn't explain why equities were down, and vice versa. If the Federal Reserve is going to be hawkish, why would treasuries be buying? Doesn't make sense, right? So that's why I think that it's a better explanation that it was market flows based on a revaluation of small regional banks that was driving the flows yesterday, which puts us in a very, very difficult situation here trying to trade this today for the FOMC, right? We're going to have to be on our tippy toes and very, very dynamic. And there's probably going to be very volatile flows during the meeting because of all this, right? So I think that's kind of where it puts us. So that said, I want to put this in Discord here because there was some talk about it. Oh, somebody already added it for him. Cool, cool. Okay. So now that I got all that, I need to blow my nose. Oh my gosh, that feels so good. Okay. So, looks like the markets have calmed down after that quarterly refunding statement. The way that I saw the flows go off there, I don't think I was the only person out there surprised by that. And the tendency that you'll tend to see is when we don't know what the news is, the market like stays volatile for longer and gets more volatile. Like we had a lot of really high volatility like initially off of that, but it's died down very quickly. So I think that it's pretty safe to say at this point that that move was because of the Treasury quarterly refunding statement. Russia says it defeated an attack by a pair of drones on President Vladimir Putin's residence in the Kremlin in Moscow Tuesday night, blaming the attempt on Ukraine. I would think it would be an unwise thing for Ukraine to try and assassinate Vladimir Putin, but okay. Let's come over now and see if we can get any kind of hot takes on the ADP numbers, because that number is like a really bizarre one. And Zero Hedge has a thing about Putin being targeted in an assassination attempt. Man, Carl Icahn sees 3.1 billion in wealth evaporate after the Hindenburg research report. ADP payrolls. Following yesterday's ugly JOLTS data, which was so bad it actually sent stocks lower amid fears of a hard landing, moments ago, the ADP, always one to surprise with its shocking wrong data, constant revisions notwithstanding, shocked when it printed showing a huge gain for April private payrolls, which more than doubled from a downward revised 142K print in March to 296K in April. The April number was not only far above the consensus estimate of 148 and also above the highest forecast of 220. It was also the biggest monthly increase since July 2022. While jobs gains were mostly uniform, there was some regional weakness in the South where 100,000 jobs were lost. Additionally, there was a drop in manufacturing workers as well as financial activities and professional business services. But while the jump in jobs was a hawkish twist ahead of today's FOMC, especially with jolts indicating the labor market was finally cracking, the latest change in wages was clearly dovish, with wage growth for both job changers and stayers sliding to the lowest since 2021, to wit. Job stayers 6.7% down from 6.9% in March and lowest since December 2021. Job changers 13.2% down from 14.2%. As ADP's chief economist Naila Richardson put it, the slowdown in pay growth gives the clearest signal of what's going on in the labor market right now. Said Naila Richardson, chief economist at ADP, employers are hiring aggressively while holding pay gains in check as workers come off the sidelines. Our data shows fewer people are switching jobs. Well, that's probably the case, but I don't think that the labor market looks too good right now, just from like the things that I can see. So, but I definitely do see a slowdown in pay growth. But it kind of seems to me like Zero Hedge doesn't trust that number, and I kind of would tend to agree. I don't think that it's going to tell you very much or help very much in being able to predict what the non-farms on Friday are going to be, at least, right? Let's see here. Alligator, better to play it hours, days before, as the Treasury is trying to anticipate a lot of FOMC. In my opinion, markets are too pessimistic with respect to the recession this year. It could play out on a much longer period, so short term, and could be repriced, maybe a bear flattening swing scale. Such a very specific analysis there by Alligator in Discord. Well, I'd say after all of that, market's relatively quiet. Oil, the biggest loser this morning, down 2.66%, and wheat, the biggest winner, up 1.43. Let's now move on to reading about Carl Icahn. The Bloomberg Billionaires Index wiped away $10 billion in wealth from Carl Icahn after yesterday's Hindenburg research report, which called into question IEP's dividend and portfolio marks. The $10 billion plunge wasn't just attributed to IEP's fall on Tuesday, but was also due to a margin loan collateralized by his stake in IEP that the Billionaires Index hadn't previously accounted for, the report says. Icahn's position on the Billionaire Index fell from 58th to 119th, Bloomberg notes, in response to yesterday's report. A midday statement from Icahn said it was a self-serving and intended slowly to generate profits on Hindenburg's short position. Of course, but I think that you got to do better than that, Icahn. We continue to believe that activism is the best paradigm for investing, and my activist investments over 25 years have proved this out. Well, I am certainly a fan of activist investing. We regularly put our activist principles into effect at our majority-controlled companies, as well as the minority positions held at our investment segment, and currently have representatives on 14 public company boards. Additionally, we strongly believe in hedging our positions to mitigate risk, especially in markets that we are living in today. Recall yesterday that Hindenburg Research accused Icahn of throwing stones from his own glass house. Our research has found that IEP units are inflated by 75% due to three key reasons. IEP trades at a 218% premium to its last reported net asset value, vastly higher than all comparables. We've uncovered clear evidence of inflated valuation marks for IEP's less liquid and private assets. And 3, the company has suffered additional performance losses year to date following its last disclosure. The research firm also called out the alleged unsustainability of IEP's dividend, stating the company's outlier dividend is made possible for now because Carl Icahn owns roughly 85% of IEP and has been largely taking dividends in units instead of cash, reducing the overall cash outlay required to meet the dividend payment for remaining unit holders. Hindenburg takes exception with the IEP needing to raise cash to pay its dividend, calling it a Ponzi-like economic structure. Hindenburg asserts the dividend is entirely unsupported by IEP's cash flow and investment performance, which has been negative for years. IEP investment portfolio has lost 53% since 2014. The company's free cash flow figures show IEP has cumulatively burned $4.9 billion over the same period. The firm also called out Jefferies for its positive coverage of IEP. Supporting this structure is Jefferies, the only large investment bank with research coverage on IEP, and has continuously placed a buy rating on IEP units. In one of the worst cases of sell-side research malpractice we've seen, Jefferies Research assumes in all cases, even in its bear case, that IEP's dividend will be safe into perpetuity, despite providing no support for that assumption. And the report concludes that Icahn will eventually have to cut its dividend given the limited financial flexibility and worsening liquidity. We expect Icahn Enterprises will eventually cut or eliminate its dividend entirely, barring a miracle turnaround in investment performance. I'm super interested in this story. Okay, N. Man, how did you get a name that's just N? I'm surprised YouTube lets you do that. Any advice on trading volatile markets? Yeah, don't do it. That's in all seriousness, though. There is kind of like a certain amount of volatility that is good for day trading. And I would say, if you are speculating, then having a little bit of volatility means that you can get good swings and good opportunities, right? And if you're market making, you're going to get a lot of back and forth, and you can kind of play that too, right? But when the market gets too volatile, it starts to get to a point where the amount of money that you really need to play and realistically hold a stop in that action is just not worth it. Okay, so when you really see the really volatile, angry market that just keeps thrashing and thrashing and thrashing, because there's a financial crisis or like when COVID happened, or those sorts of things. And they usually happen once or twice a year. Those ones for retail traders is probably better for us to stay out. Okay. But when we do get that volatility, I think for, speculation, I think the key thing there is to get in early, right? If you can anticipate the flows before they come and you can get in and just take a swing trade early on, before things really truly get volatile, you can just kind of sit there and watch it float around, right? Another thing that you want to be looking out for is anticipate like what the slate of economic releases and so forth are going out into the rest of the week, and what volatility is likely to do. Because what you will often have happen to you is you'll get in, you get a really good swing, and then you say, oh, I can hold this all week. And then the next day it all retraces. And this is extremely, extremely common because a large meta order going the other way is going to, wait for just yet. They're going to let them push it up first because that gives them a better price for their sell or whichever direction it's going to be, right? So it's usually unless you really have a strong reason to believe that the next set of shoes are all going to drop in your direction, it's usually better to let that trend play out through the day, and then once it starts to flatten off later in the day, you close it. Yeah, Uzi's right. Enter in silence, exit in noise. That's the way to do it for us, for sure. Then the next thing is to understand the DOM and the empirical properties of order flow. So I have an order flow video series. Watch all of those. You will understand much better how to deal with this sort of a thing. You'll be able to understand when, because what you'll see happen is you'll think, oh, it's super volatile, right? It's trending, it's super volatile. I should be able to take a trade anywhere in here and make money. And then it's like, as soon as you take a trade, the market just goes flat and doesn't go anywhere, right? Well, there's a reason why that happens. It's a liquidity hole is forming in that area, and that can kind of leave things quiet for a period of time. And so we talk about that in my order flow series. I also have a PDF If you go to speculatorsstuff.com/strategy.html, you can sign up for the mailing list that will send you the free PDF. And that also has some tips on how to deal with that problem. About how to use the order flow to adjust your entries to avoid some of these problems. But it generally revolves around reading the current liquidity conditions and looking for that liquidity hole and avoiding it. My right eye itches so bad. Okay, next story. Putin targeted in terrorist assassination attempt by drones, claims the Kremlin. The Kremlin says 2 drones were sent by Ukraine in an overnight attack on Moscow and on government buildings, which it sees as an attempt to assassinate President Vladimir. Okay, so they were in the Kremlin, but they weren't necessarily attacking Putin directly, per se. Is what I read from that statement right there. The president was not injured in the attack and is said to be safe. There was no material damage to the president's office. And the aircraft were down using electronic warfare measures. I think that this story looks like a much to do about nothing, actually. So I'm going to just kind of ignore it for now. Does look like they're developing a range around those 115.27 here. I'm curious to see if oil continues moving today or not. Just taking a look over there. I'm just kind of reading around here. Here's an interesting thread on Reddit. Is there a tendency among, well, the thread is political, I'll just read it. Political ideology of traders. In my personal experience chatting with other traders in forums, discords, etc., I've noticed that most American traders are right-leaning or heavily right-leaning, with very few of those on the left. Is there a reason for this? What seems to be a broad way of thinking? If you fall into this category, how does this tie into your mentality or psychology during the day? Maybe I'll write a response to this later, because I get a chance to talk to a lot of traders from doing this, and I interact with the trader community a lot. And my observation is that the political opinion of traders tends to match pretty closely what the demographics are. So among day trading is largely older men. Day trading is largely men in their 30s and 40s. And men in their 30s and 40s tend to lean right. right now. So yes, probably the ideology of the traders is going to tend to be right wing. And if you get to the younger guys, they're probably much more likely to be liberal. Yes. I don't think that has anything to do with like some sort of difference in traders and the way that they think compared to the rest of the. It's just they're mostly men, and that's the biggest factor pushing them, I think. Let's see what other people on Reddit think. Marx and Engels were both traders? Really? Did not know that. You know what's something that I see a lot on TikTok that drives me crazy? There's a number of influencers that are like, I went to economics school, and by watching economics, I went to economics school. No, I don't want to place that. I should stop using first person voice when I'm talking about other people saying things. I've seen a lot of TikTokers and stuff that they say they went to economics school, and in doing so, they learned that economics is all a bunch of BS. And so now they are fighting against economics and capitalism and things like that. And it's like they went to school and then they became an influencer and they never went into the private sector. And I'm just like, oh, okay, so you never actually like learned anything, right? Because all of the real knowledge comes from once you're actually in the industry and you have to put things into practice and stuff. Like what you learn at school is like really super general. I've seen a lot of that. People that they only understood, they only went far enough to know enough to be dangerous and not actually know enough to actually really understand what's going on. And there's a lot of that out there in the economic circle. This guy is saying Jim Simmons is left and there's this other guy that was right. Oops. And they kind of work together at Renaissance Technologies. Okay, I'm going to say the political ideology of traders tends to match the overall demographics. Most traders are 30 to 40-year-old men, and that demographic tends to lean right. I don't think there's anything more to it than that. Oh, we do get some numbers here at the top of the hour, huh? US S&P Services PMI final. This ISM Services PMI that we're going to have in an hour is going to be like, ooh. Oh no, sorry, not Services PMI. That's just Singapore Manufacturing PMI. At 7:45 we get S&P Services, and then we get ISM. I'm anticipating this will be a lot like Monday, and that it'll probably be relatively quiet up until that PMI releases, right? Oh man, so I don't know if I really want to get too deep into this subject today, because I'm about to open up like a really crazy can of worms, and it's an issue that I don't feel like I am well versed in the proposed solutions for. But you may remember Steven Crowder, far right. I would call him a provocateur, because the way that he became famous was going on campus and arguing with leftists, and right, that's his kind of claim to fame. And then he started an argument with somebody on YouTube, and he said a couple of disparaging remarks about that person, and so they banned him. And then he went off on his own. I haven't been the hugest Steven Crowder fan, honestly, since he left. I kind of feel like he's a little bit impulsive. For instance, he was doing those negotiations with the Daily Wire, and he thought that they weren't offering him enough, and I thought that they gave him a pretty good deal. And then after he didn't take the deal, he disparaged them, which a lot of people were arguing in his favor and everything, but I think after the fact, it makes Crowder look really bad, and I think that his popularity is probably waning. Well, Steven Crowder is getting divorced. And so now that he's getting divorced, he is now concerned about the divorce laws. And, he doesn't like that she can choose to divorce him at any time for any reason. And, he may still want to remain married, but she can still take 50% of his assets. He doesn't like that. I mean, nobody would like that, but what are the rules supposed to be? So the kind of the movement, I guess you could say, that we're kind of seeing come about from this is they're calling it getting rid of no fault divorce. So they're saying that the number of instances that a divorce can be no fault should be like limited or something like that. I don't know how you listen. I gotta tell you, I've seen so like I saw this thing yesterday where the guy said he has to pay $2,000 to his ex who cheated on him, and he doesn't get to see the kids. That's so messed up. I wonder what state that guy lives in. So messed up. There are some really messed up things with the divorce system out there, right? I don't know what you change it to, but it seems very clear to me that this is an issue that's kind of been like quietly sitting out there for a long time and is now starting to boil over into a political issue. It actually like kind of really bothers me, because like when I see people argue about it, like women will just say everything in favor of women. Which is, they will refuse to acknowledge that there's like even problems with the current system. And then some of the solutions that I see proposed by men seem like really crazy. Like that, there are some instances where the woman just shouldn't be able to get divorced at all, which I think is really crazy. It almost kind of feels to me like this is more of people trying to vote themselves benefits through the government. And it's like, it's gotten so extreme that you're trying to vote yourself benefits at the expense of your spouse. Like, oh my gosh, guys. Like, here's the thing. My thing is finance and systems. And I want to understand the market and where the best place to invest your money is and what's moving the futures market in that day, and treasuries and interest rates. And like, that's my thing, And I constantly feel like that in order for us to get to a place where the public can even really worry about those kinds of problems and deal with those problems, there's all these other problems that we have to get past first. And so like we can't actually always talk about what I want to talk about, because there's all this other stuff in the way. I find it really frustrating. But I thought that was something worth pointing out. We may end up talking about it in the future. it seems like over the next 2 years, it could become a bigger political issue. So giving you a heads up on that, that might be one thing that you might want to start like researching, because it's like even like this is something that could possibly come up in debates. For instance, I've never seen a debate question about divorce, right? But this, you could see this election cycle, you could see a debate question about divorce laws, for instance. Okay, question: do you trade off of order flow or news? The market can be interpreted the data both ways. For instance, higher ADP report can be higher interest rate, or good labor market, no recession. Okay, so my framework that I work from is this, okay? What moves the market? Orders are what moves the market. So in order to have profitable trades, we have to be able to predict future order flows, right? I have to buy before other people are going to buy. I have to sell before other people are going to sell. I'm anticipating future order flows. There are a number of things that drive order flows, okay? Some people will buy or sell something based on changes in expectations about future flows and fundamentals, okay? So if the ADP report comes out and it's better than expected, and so people anticipate that the economy is better than expected, and they might go out and trade things a certain way based off of that, right? I think that generally speaking, you would tend to say, okay, the labor market looks pretty good, but that means the Federal Reserve is going to be more hawkish, right? So you might see equities kind of be okay, / maybe even buy a little bit off of that, and treasuries sell off, for instance, right? But that's not the only thing that moves flows, right? Another thing that will move flows is a fund rebalancing at the end of the month. And it just kind of so turns out that those sorts of things that like a rebalancing and the flows that on the surface would appear completely random to you, at least random with respect to the fundamentals, actually tend to be the most powerful flows, right? So there's this whole kind of like circular problem, as I think that's what you're really dealing with here is like there's some sort of a circular feedback loop between treasuries and equities, and how do you sort that out in certain instances, right? If ADP was really good, then that should be good for the economy net, but then good for the economy means the Federal Reserve will continue to raise interest rates, so the treasuries sell, but then that weakens the economy. And so then, doesn't that cancel that effect back out, and so on and so forth? But the way that I would just approach it is like, what is driving that flow at that moment? Like when if news event comes out, you're going to see it because it's going to move a certain way almost immediately, right? I mean, maybe 30% of the time you will get some reversal, or like the initial flow is like a head fake. But generally speaking, like the knee-jerk reaction that you get is going to tell you what the flows tend to be off of that news, right? And generally speaking, at least in the treasuries, I'd say it's a lot easier in the treasuries. Higher ADP is going to mean treasury sell, and that's what you saw today, right? It is complicated. But here's the thing: is like ADP, for instance, today. Okay. Treasuries definitely sold on it, but not that much really did it. And it ended up being washed out by the Treasury refunding announcement and all of that. I mean, we got so many other things coming up, right? I think that right now, the PMI services, PMI prices that you're going to get at the top of the hour is probably way more important than ADP. I honestly, at this point, I don't know if the ADP report is even useful. It never seems to be in line with what the non-farms ends up being, So, but market has been very, very sensitive to those PMI numbers that past few months. So I would really pay attention to that services PMI number that's going to come at the top of the hour. And then, of course, we have a Federal Reserve meeting. So, but the way that another thing is you're looking for flows. We can categorize certain kind of flows, right? So like yesterday, what we got was a risk off flow. Equities down, treasuries up. That's a risk off flow, right? That tells you a lot. When it's a risk off flow, people are taking risk off of the table. They tend to sell their equities and buy treasuries. When it's a risk on flow, they're putting risk on the table. You tend to buy equities and sell treasuries. Okay, it's the opposite. Okay, but then there's another split side, which is which I call buy all the things, sell all the things, and that usually comes in response to the Federal Reserve directly, right? So if we have an economic number, you're much more likely to get that opposite correlation. Sorry, what's inverse correlation? You're much more likely to get them inversely correlated. Whereas if we're having a Federal Reserve meeting and Jerome Powell says something that's more hawkish or less hawkish than expected, you will tend to see them move in correlation with each other. Yeah. So we're going to have a Federal Reserve meeting today. My, what would I say? My prediction is that the Federal Reserve is going to continue to be pretty tight-lipped. It's not like they're not saying a lot. It's that they just keep repeating the same things and they don't give you any new information or anything to work off of. So like these last few FOMC statements, even after situations where there would like be major changes and you think that they would change the statement a lot, there's like zero changes in the statement. They change like one word, right? It's been like that the last few meetings for a long time, right? And then when you have the press conference, Jerome Powell doesn't actually say anything new in the press conference. Of course, the market like reads everything that they can into it, and so they'll say it's more or less hawkish than the market expects. But like in reality, he never says anything that he hadn't said before, right? So I think it's going to be a similar thing. I think it's that he's going to avoid saying anything. He's going to say, well, we said we were going to raise until May, and then maybe we would have a pause, and it looks like we're at that point that we could have a pause. Yeah, these regional bank failures does kind of do the job for us a little bit. Like that tightens monetary conditions, so we don't have to raise interest rates as hard. But now we're time for the pause. And I'll be like, oh, well, that's nothing new. That's what he said before. And the market will be like, oh, that's so dovish. We need to buy all the things, right? That's what I think is going to happen today. Of course, I'll be around. Yeah, we'll be watching the press conference. Gonna blow my nose here. Now, another thing that I will say is that the approach that I would take to this sort of a thing is kind of like the approach of a detective or a scientist, right? You'll come in and you'll see a flow, and then you should try and identify what were the drivers behind that flow. And sometimes it's just really obvious what it is, right? Because of the timing and whatnot, nothing else makes sense. But sometimes, like yesterday, there's going to be multiple situations. And so you can just kind of list out your theories, and then you can look for information out there to confirm or deny those theories. For instance, one of the theories was that the markets is trying to front run the Federal Reserve or whatever. So if Jerome Powell does end up saying something like really significant today, and the market like underreacts compared to what we think that they would, I think that would be a really strong mark against that theory that yesterday's flow was front running the Federal Reserve, because then their expectation, they were trading based on some expectations, and then when those expectations weren't met or were contradicted, you didn't see an equal flow in the opposite direction, right? Because they're wrong. I still think that the flow yesterday was mostly about regional banks repricing, you know? So if the FDIC came out and said, well, we've changed things and now we're going to cover all deposits, right? I should expect all those banks to come back up, and I should expect to see those flows that we saw yesterday reverse. And if they don't, then that maybe makes me think that maybe that's not what was driving it, you know? So I can kind of keep all those theories and look for, you know, pieces of information that might help me confirm or deny my theories. And then I'll use that information going forward that, you know, okay, well, in the past here was a similar situation and these were the flows that we saw. Because the issue is, what makes it difficult is everybody wants to think of it as like a binary thing. Okay, we have this pattern, and that means that it's either going to go up or it's going to go down from here. And in the past, it goes up 50% of the time, or something like that. And what I'm trying to teach people is that that's too simplistic of a view of the markets. The reality is that there are some people that are buying because of this reason, and there are some people that are buying because of this reason, and there are some people that are selling because of this reason, and all these reasons. And when you combine all of those things together, that's going to determine whether we go up or down. And those people are going to buy or sell, like, regardless of what the patterns that you see in the market are, right? So you have to be able to judge how big each of those flows are to sort out what the end result of them are. And that's how you can actually make an accurate prediction. That's super, super hard, but there are some situations where you can do it. Man, I'm so sorry. I feel like I'm having like super serious allergies today, and like the way I'm talking is like super broken up and everything because I can't freaking breathe. Well, it's clear right now. It's just in my eye, it's just like crazy right now. I got lucky. On Monday, I was pushing my wheelbarrow, pushing my gravel around. On Tuesday, my neighbor had a small little tractor thing, so I was able to use that and basically get all of the gravel back there. So that makes that job a lot easier. Less having to be outside and thus less allergies, I guess. I hope. We'll see. Well, okay, Mohammed A. El Arian, the Fed today should acknowledge a weakening economy and the continuing risk of bank tremors, and also signal a shift in its approach to rates. I think that that's likely, and yeah, off of that, I think that you would tend to see both treasuries and equities buy. Slow today? It's, you know, Dave, we have relatively significant news at the top of the hour, so we're just kind of biding our time until then. I think that the market will probably react quite strongly to the services PMI data that we get. But I wouldn't say that it's unusually slow. I mean, it's slow, but it's been slow like this for a while. And that may possibly, maybe we feel that way because before that the markets were just like crazy, like some of the action we had was like super zany. So let's see here. Nick Timmeros, new: the U.S. Treasury will design a program to buy back government debt with plans to execute purchases beginning next year. Buybacks based on feedback from a broad variety of market participants, including the Treasury Borrowing Advisory Committee and primary dealers. Treasury believes it would be beneficial to conduct a regular buyback operations for cash management and liquidity support purposes. The Treasury anticipates designing a buyback program that will be conducted in a regular and predictable manner, initially sized conservatively and not intended to meaningfully change the overall maturity profile of marketable debt outstanding. Given various operational and design considerations, Treasury expects to begin a regular buyback program in the calendar year of 2024. The Treasury will continue to engage with market participants as it designs the specific buyback program details and will provide further updates to the public on its implementation plans in future quarterly refunding announcements. So what I heard is government buying more government debt. That's bullish treasuries, right? I don't know. We'll see what what Fed Guy 21 says about that one. I'm going back, seeing if there's any other stuff going on. Well, Joseph Wang is up. Let's see here. 40 million. The Treasury is thinking about issuing 1 trillion in bills in the next 6 months, provided the debt ceiling is resolved. This can potentially drain the reverse repo, the RRP. Sorry, what the reverse repo program, that's what that stands for, right? And add lots of liquidity into the banking sector. If MMF are the marginal buyers, they have not been and may not be. Sorry, MMF stands for money market funds, I believe, right? Because kind of the problem has been that people are going into the money market funds and not other places. I've been trying to, like, you know, talk about a lot of different things here, but I should probably relax a little bit because I talk too much now. That just makes it my day that much harder when we're talking during the Fed meeting, right? I'm usually so exhausted after a Fed meeting. I am detecting a hint of a buyish tilt to the treasury shares. So the order flow in the 10-year has been mostly flat. When I look at the 30 and the 5, I can see buying through this range. And we're at the higher end of this range. So I think if you had to, well, you know, maybe we should try and mess with some stuff here because we can do it on the sim order here. I think on sim that might be worth it to try and market make around this location in the hopes that we see buying later on. The big one thing that could kind of put the kibosh on that, though, is the PMIs. The PMIs, I think, are likely to be hawkish. Given what we saw in the manufacturing PMIs, I don't think the services PMIs will be better. So, probably whatever kind of position I build up here, I think I would want to have it off before the news. But it looks like we're getting volume on both sides here, so I should be able to take a few out. Yeah, easy. Oh, I was like, what is HK, Anastefa? high, that makes sense because I is next to K. Okay. Volatility peaked up since regional banking concerns. So, the thing I read this morning was Charlie Gasparino from Fox Business News was reporting that banks were revaluing the regional bank assets based on what we saw from the SVB. Basically saying that these distressed assets that they have on their books are worth 85 cents to the dollar. And that's what was driving them down yesterday. So if it was like a revaluation of the regional banks, you wouldn't necessarily need to see continuations off of those flows. You know what I mean? Or rather, you would see a temporary spike in volatility that would very quickly die back down up until the point at which another bank was going under, right? Can we call this? Oh, I think we can definitely call it the regional banking crisis. I mean, I don't think it's a question of is there a regional banking crisis. It's a question of how bad is the regional banking crisis, right? Is it just Silicon Valley and First Republic, or is it going to get worse than that? Right? So there's, like when we talk about questions in the economy, I think that's like one of the big three, maybe, right? So one, how severe is the regional banking crisis? Two is, will we have a hard landing in the second half of this year? Three, will inflation continue to be sticky? Continue to persist, continue to be sticky. So that's why PMI's so important here this morning. So that's something that's going to tell you what's going on with inflation. I feel tick size should be higher as inflation sticks. Wait, so are you saying that you think that the tick size of ES should be increased while inflation is a thing? I don't understand. What would be the actual consequences of that? Well, I don't know. I do kind of feel like that there would be a benefit to increasing the tick size in the E-mini for sure. But I think the problem that I have there in terms of like predicting that they would or wouldn't do something like that is that what drives the S&P 500 to change something to an instrument probably has nothing to do with what would be best for the economy overall, right? It seems to me like the CME probably makes more money with the equities being all over the place all the time, right? That gives you plenty of volatility and plenty of reason for traders to try and take small little trades, and the more trades that you get, the more commissions they make, right? I may no longer be able to pay for a meal with one tick in as well. I don't know about that. With one tick, I guess, but I think that unless you're a robot, you're gonna have a really, really hard time just getting, consistently making money with one tick. And yes, there's a little bit too much noise in that area to hold a stop. Well, we just broke some highs there. And I'm seeing a little bit of liquidity stacking on the bid as this happens. So I think that there is a meta order coming in long here. Well, we should be careful because there does tend to be a little bit of activity in the treasuries around this time when the equities are opening up. It could just be that. Yeah, I don't think that the CME considers how realistic is it for a retail trader to make a living from doing this. I don't think that that's on their mind, right? I think as far as the bigwigs are concerned, the days of the local are over and that they're not their primary concern. Trying to judge, so we had a little bit of a breakout and then it fell back down through. I'm trying to judge how the liquidity is responding now that they've come back. There was 1,000 contracts absorbed at 29. I'd say that that's not bad. That's not like a super strong signal that it's holding, but it's not bad. Oh look, so they just swept back down through 29.5 and then hit 29 again. Now I'm seeing a little bit of throttling. So in that situation, the offer was stronger than the bid, but then you started seeing orders hit aggressively at that 29.5 and pushed twice to clear it. So that would be a sign of aggressive market buyer. So Trading Floor Audio tweeting about Ukraine accuses Russia of planting a large-scale terrorist attack on Ukraine by staging false flag events. As for the drones over the Kremlin, it's all predictable. Russia is clearly preparing a large-scale terrorist attack. That's why it first detains a large, allegedly subversive group in Crimea. Then it demonstrates drones over the Kremlin. So does that mean that Ukraine is denying that responsibility for that attack? Now all of a sudden this story gets more interesting, doesn't it? What's the target? Here's a good question. Because I'm kind of wondering if I've already overstayed my welcome. I think I'm gonna keep it on for a little bit, but I think I should take this off before the PMIs. So I don't really put a target in terms of price usually, right? I usually have more of a target based on volume and time, right? Like I might say, well, okay, so by the way, the amount of change that we're seeing in cumulative delta is still super tepid, so that's why I'm kind of like, if we get a good trade out of this, I think that 10K net change in cumulative delta would still be would be a pretty good trade. Oh, it's not that we can't predict future order flows. It's that I can't necessarily predict what that's going to bring the price to. Always, sometimes he can, But right now it's tepid enough. I'm not too sure. Not too sure. Well, sure, they sure came back up to that high quite nicely. So again, when you get a breakout, you'll often see them slip back through the liquidity hole that they kind of, you know, like the liquidity through that move kind of sucks them back into it, like a vacuum, sucks them back down. And then you see if the limit orders, you know, how responsive they are at 29. And I don't know if that 1611 at 29 was enough. You know, I was kind of unsure. I was like, well, that's a positive sign, but I'm unsure. But like, look how easily they came back up there to 30 half. And I am seeing some signs of aggressive buying activity. Oh, well, there's that 1583 sell too. Okay, but like, look at that. They hit 30 half, and almost immediately 318 hit into 31 for a new high. You got long from 27 too? I'm not sure how it ended up being 27. Because I was able to take a 1 tick profit there 3 times. So I'm not quite sure how it ended up. I thought that I should be lower, but maybe one of them was actually a loss and I didn't realize it. Why is the entry price on your DOM showing 275 when that's plus 1 tick? Well, so I took 2 contracts, right? Yeah. So that's why my break even is all the way at 27. It's because I took, you know, I caught the tick there at least twice. I think what happened was I bought 1 contract at 28 and then 1 at 27 half twice, and that's why it ends up being like that. There's 1 loss between the 28 and 27 half. Yeah, I don't know how serious this way of doing, how serious I would want to take this way of doing things that I do on the sim. I mean, there's a lot of risk to it, right? Yeah, it's not live, it's just a sim order. You're taking on a lot of risk to do it, right? Taking like a few ticks, and if there was like a big move against you, I would just be so screwed, right? But it's been working pretty well for me over the year. Thought we might be walking into a sandbagging. Well, I sure am. Like, again, I think that the services PMI at the top of the hour is an important metric. So I'm actually, because there is the S&P PMI at 745, that could be a risk for me as well. I'm just gonna put an order out there, see what happens. That's at the moment it's looking like I'd have a hard time getting 31. The buyers kind of had to reach to get 31, and they've slipped back down a little bit. Nah, but I've only been taking the live trades in the micro treasuries with that account, so. So I'm seeing a story from The Hill. Tucker Carlson texts about how white men fight alarmed Fox leaders before ouster, says report. So what I'm seeing is Fox going, okay, now that we fired him, we have to make Tucker Carlson like public enemy #1 and like destroy him in the minds of our viewers. And what it's doing is it's just causing all of the Fox News viewers to not trust Fox now. Not that they ever should have, but I'm just saying, like, you're seeing a really significant shift in news here with this Tucker Carlson story, and it seems to me like the Fox News stranglehold on the right, you know, right-wing news and culture is over. And that I'm still seeing stories about that just like reinforces that to me. Because I mean, that was like last week. It's been over a week now. And they're still trying to play political games with it. Interesting, right? Now it's like, you might not even get 29. Okay, 29. It's not a huge strong bid at 29, though. Okay, big order at 116 even. Or was that one that just got placed? 1,000 lot, yeah, at 116. 843. Okay. So that is what I saw. I guess I have to take just the vortex. That sucks. But I really don't want to play it into the news. I'm really concerned that that news could be in negative. I think it could be, what you could see is like the cert prices and everything are higher than anticipated and the treasuries sell really hard off of it, but then it like slowly floats back up again. Kind of worried about that sort of a move, so. Tired of seeing this market dancing around 41.40, 41.45. The activity, well, so I tell you what's going on, Alfredo, is that since the SVB crisis, the market went into a sell volatility mode, and what that ends up with is creating these really tight ranges that people are selling options across. It's very frustrating if you're a speculator in the futures, isn't it? I mean, you can trade that range, but you just know that eventually that range is going to fail, and when it does, you can get so screwed, right? So it's a hard thing to trade. Okay, I am seeing the liquidity pulling off here now, a minute ahead of the news. So I don't know if I got a very good price, but I definitely wouldn't want to be in this right now, so. I'm not saying that should be the case for you, but for me, I'm not. That was not the risk that I was trying to take with that trade. It was an okay trade. I think it was an okay trade. I think there was a lot more luck in that one than I would have liked. Because, you know, I had reason to think that there'd be buying flows here this morning, but not necessarily during that time period, so. And also, just note that the S&P PMIs are not as important. Okay, so S&P services, we got 53.6 versus an expected 53.7. So that one kind of ends up being a nothing burger, I think. Liquidity is still light. They did tick up. Now, I really think that playing this from the long side today makes sense. It's just like, It's just a question of like, what time do you take it? What price do you get? You know? Then the estimation that I'm making is that if the larger flows for today really are buy, that after PMI might be a better timing for it. Is kind of the call I'm making. This song in the background, it's got like the choir and everything. So intense, so dramatic. And you also got, how did you guys all end up, are you guys shadowing me? We all end up long 26. That has me concerned. That has me a little concerned, guys. Because I kind of did that one on a little bit of a, oh, you know, I'm a little bit bored. We can take it on sim. Do you think that it's long? Having two other people in chat saying the same thing kind of concerns me. I shouldn't say that. It's just gonna make you all want to shadow my trades now. Like, oh yeah, it's working out really well. We should all just follow him. You were long since AESD. Oh, really? Wait, how did you get that at? Oh yeah. Okay, we were in that area. I was like, how did you catch that price? Oh geez, that's too long called. I'm surprised you take that and then didn't be like, oh no, ADP is so terrible. Or I mean, is so good. Like really that ADP number is like, it was like double it was 100,000 more than the consensus. That number really is zany. That number basically makes me think ADP is BS. But if I had a position on it, I saw that number, I certainly would have puked it. What does Nassim Taleb mean when he calls someone techno waterman? I've never heard him say that before. I have no clue what he means by that. I don't know, man. To listen to Taleb on the statistics, but I would ignore him when he gets to politics because he gets way too emotional about it. I don't think he realizes how emotional he gets. He's probably a little autistic. Yeah. I mean, to be that smart. Yeah, when he gets really upset with someone, he calls them that. Yeah, to be that smart in statistics and stuff, probably you're a little autistic. Because he is just way more aggressive on Twitter than you really need to be. It kind of makes me wonder, like, what are with the interactions that people have on Twitter? I guess it's just that I've never liked Twitter. I don't take anything that happens there seriously. Well, no, he's not talking to anybody in his books. But I guess what I'm saying on like he is. Oh, I'm sorry, I was like way too loud there. He is very quick to insult people on Twitter, right? You question him even a little bit on a point that he's made, and he will call you names and stuff. It's super crazy. on the same hand, sometimes when people try and argue with me on Reddit, I try not to make it come out in the posts, but I get like super irritated by people on Reddit sometimes, man. Because it's just like always like they're so obtuse, you know, it's like they're intentionally misunderstanding things or something. It's so crazy. And I also, something that I really hate is like, if I come in and I try and make a nuanced point about a particular thing, right? All of a sudden it's like you're the absolute worst of everything that they see about the other side, right? Like if you come in, well, I do get irritated in here too, but it's also like I posted on a TikTok, the online TikTok, saying, yeah, well, markets are not informationally efficient. And then you get this guy that's like calling me a communist and shit. Just because we know that the market is, you know, the empirical data, that the market is not efficient, and that stock buybacks do affect market caps, that doesn't make you a communist. But they're assuming, oh, you would only be arguing with this person if you were a communist. It's just so retarded. And you get that on Reddit too, right? You push against the Democrat orthodoxy, we have to beat you into the ground. Hate it. But I don't intend to beat people to the ground. I want to be very strict about like what is true and what is not true. The things that we know are true and not true. The reason I get upset on the stream is because that's where I feel like people should understand where I'm coming from. And when I get pushback against things that like we talk about every day, I'm like, people should know better. Why? I don't feel like I should have to argue this one anymore. That makes no sense. Well, we still got 8 minutes to the news, right? You want to hold until 01? The market is, well, I usually don't. You know what? I would love to argue about that on TikTok, but nobody on TikTok ever wants to argue about that one with me. No, so you know what it was about VIG in particular? Was the question was, should stock buybacks be allowed? And the argument was being made that, you know, a company comes and buys their own stock, that tends to move asset prices up. And they said, well, that doesn't really make any sense, because you know, if a company bought its own shares, that means that there's less shares out there, and that would make the shares worth more, but that doesn't necessarily make the company worth it more, and therefore market caps shouldn't change. That was their argument, right? And we just know that that's false. We know that market caps do change, and that the overall market cap of the equity market is, like, I think there was a study on this that said it was something like 5% higher than it otherwise would be without stock buybacks. So they're saying something like objectively false. Is it like too nuanced of a thing to talk about? I guess. Like, I was kind of hoping that Bran would respond to me, and that would give me an opportunity to make a video and like go into depth about it, and then maybe you would see where he was wrong, but whatever. If it's gonna get there today, I think that you got plenty of time. My take is that the treasuries are probably likely to continue being net buy over the next 3 to 6 months. Actually, from day to day, that might be very, very nuanced and difficult to trade, but in the longer run, I think probably a little bit tilted to the upside, because the Federal Reserve is going to pause and the economy looks like it's getting weaker, right? The big risk to that is inflation. So services prices really important here. Buffett called those people economically illiterate. Well, Buffett is one of those people that says stock buybacks are good and that it doesn't actually. I don't know if he necessarily says that it doesn't affect market caps, but he just says it's good for investors, so it's good. And I don't think it is. Because from my view, money is being invested into stock buybacks that should be invested into employees and other things. You know? I'm really sick of this thing that we see in Wall Street where people do everything that they can to get the short-term profits at the expense of longer-term growth. You know, like I want to see 3% GDP growth a year become a common thing again. That's what I would like to see, and I don't actually see the investment to make it happen. You know. And these sorts of things like stock buybacks and the public's understanding of that, I think, are some of the things holding us back from seeing that growth. You're not going to get that growth without like putting in the proper investment. And that will mean, yes, too, investing in labor, in investing in your employees so that they can, you know, do more and become more proficient and so forth. And it's just they'd rather just give the money to the investors and just slosh money around and not actually like grow things. You know, they can run their company and invest the money the way they want. But like, here's the thing. The impact that buying your own stock has, especially in the short term, is just so strong. You just can't compete with it. Why should we allow them to buy their own stock when it's, you know, like nothing else can compete if it has an objectively negative impact on everybody else? Because it was not always legal, right? It was only came around in the 80s, I think it was, that they allowed stock buybacks. And when it first came out, it wasn't even like really a popular thing. It's only been in the last 10 years or so when they've realized how effective of a tactic it is. And now you have some companies that they're basically, that's all they are now, is just buying back their own stock. You know, like Apple is a great example. Apple buys back their own stock. They have a large cash position. They're not doing anything innovative in the space anymore. They haven't done anything. You have to go back into like the 2000s to get back to like really significant developments in Apple now. Okay, time to focus. We got 30 seconds before this news, and the liquidity in the full treasury is definitely pulling. And let me come back over here to my financial juice screen. Services PMI expected number 51.8. Prices paid last time around was 59.5. There's no estimate, so we'll just use 59.5 as our anchor, but that's the number that we really want to pay attention to. Okay, so prices paid was actually slightly higher than last time, 59.6 versus 59.5. The headline number, ISM Services PMI, 51.9 versus 51.8, so slightly higher than expected. I'm kind of tempted to sell it here. The reaction off of all of that was like really tepid, but it was, well, composite was 53.4 versus 53.5. But to me, those prices paid still being 59.6 is really not good. The problem that I have here, just based on that news, well, okay, if you can force me. just based on that news, I think you could see some selling. But in the larger picture of things and throughout the day, we could still see some buy flows come through here, right? Sure it is. De-legalized stock buybacks is not a way to incentivize innovation. Yes, it is. Because the stock buybacks is basically like a drain on the overall economy. It's activity that happens in the stock market that doesn't actually produce anything. So we don't actually benefit from it. It increases valuations in the short term, and that's it. Now, if you were going to get rid of it, you couldn't just get rid of it. You'd have to phase it out. But I don't think it's a positive thing for people. Seeing a little bit of fight in the tape that I'm not expecting here now. I'm not quite sure what to make of that, really. Like, I was really tepid up until I saw like a bid come up there really aggressively and stuff. But that ended up not being a very good take. I was trying to catch the edge and it just didn't work. I'm now throttling at 30. Let's puke. I definitely should have waited because that was exactly what I was worried about, right? I should probably flip around here, huh? No, actually, 116 even. I don't know about that. I'm seeing buying through here, though. Problem with flipping around is that there's probably not a whole lot left on here. Like, I think that live action is probably going to get us a 1 right there, right? No. Oh, sorry. When I said that, sometimes I mix up when I'm talking about the full treasury versus the micros. But what I meant to say was, based on the news that I got there alone, that's a number that suggests that inflation is still going to be sticky, and ergo I would sell the treasury. And I could see a little bit of selling coming in, and I saw like the micros kind of do something a little weird, so I tried to do an as she goes trade that didn't work. But the bigger picture to me is still buy. So I was kind of worried, like, I don't know if this is enough to shift things. They might ignore the news and buy, and that's exactly what they ended up doing. Does that make more? Did I explain that more clearly that time? That said, there was kind of a volume crescendo there, so they're probably going to pull back a little bit. And then we see where they go with this. How bad was that one, by the way? 368. Oh, okay, it was good. I got out way. Could have been much worse. Could have been much worse. Seeing a lot more people in the micros get involved here. Seems like the flows are reversing very quickly there. Russian MP says time to launch missile attack on Zelensky's residence after Putin was targeted. I'm still not seeing the evidence that they were actively targeting Putin and that it was actively Ukraine. This kind of sounds like something that could escalate very dangerously. Probably not related to any of the market flows, but maybe a story that we do want to keep an eye on. Yeah, that flow is reversing very quickly. The volume profile starts as a treasury cache open and prints open in the alert column. Is there a way to set Jigsaw up so that it does not write the open? Oh geez, I forget how that works. I think that if you go into settings, there is a tab in here. Hold on a second, I'll try and open it up. Even though we kind of got some stuff going on here. Under load levels, maybe? No, I don't know. I don't know where you control that, to be honest. You should go, we should go into Jigsaw's Discord and ask that question. So I think there is a way. There's a couple of things that are like there in Jigsaw that like when they put the feature in, they made a video about it, but they didn't like thoroughly document it elsewhere. And that happens a lot. Okay, so there was like a really strong impulse of buying and now an equal impulse of selling. Equal impulse of selling. And I'm not detecting, at least from my spreads, a significant change in the yield curve yet. So you keep an eye on that. Given that the flow sold, it remains to be seen if they continue selling through. That might not happen. Okay. So sometimes I'll put an order out there to see if they hit it. I'm like, well, I'm okay if it's hitting it. It might tell me something about the market, but they didn't hit it that time. It looks like, you know, they're able to get some sellers at 29.5, but there's plenty of liquidity there still refreshing, so. Is the dollar moving off of this? It looks like the dollar overall is moving down. Although it's a little choppy. A little choppy to get a super clear view of what's going on there. So, what I see at the moment is a situation that would normally result in trapped traders, and I'm not sure that it actually did. So like a strong move up and a strong move back down, you'd think that there'd be a lot of people that would buy into that and then get caught and be short and then start getting squeezed out on the bottom side. But when you look at the cumulative deltas, it looks like, you know, all of the selling was equal to the buying. Now, normally on the second leg, that pushes it further, and that didn't happen, which is a little curious to me. So, and now it's kind of getting quiet there, although, okay, interesting. There was stacking liquidity on both sides and the sellers decided to sell it. I'm not detecting any major changes in the overall liquidity yet. I guess that's kind of good, because if we're going to see buying in the treasuries, I would be worried about if it bought up and then you'd see stacking on and the liquidity increase, because that's kind of what I would expect to see. This move down, I think, is a little bit more technical of a move. Interesting. Yeah, they're still fighting it. So there's a little bit of shoving back and forth. I mean, I still am detecting like signs of low latent liquidity at 29.5, but there have been some market orders that have come through here. So the fighting is actually creating a liquidity hole, I think. Yeah, market makers just messing with them now there, because they pulled it at 29 there. They're pulling it 29.5. Five-year. It's holding that. That test was a little bit more serious for me, but it still didn't get any takers willing to cross the spread for me. So there was a lot of shoving there. Oh, okay, buyer 277 to take 30. It's not shoving so much now, but it is like kind of floating up now. Like I'm kind of concerned that like the seller's already overextended. And like I caught a good spot there and everything, but I'm not really getting paid for it in the end. I did not get a good exit there. I would have had to have crossed over. With ZN, with the dollar dumping, you'd think that ZN would bid more. But what ZN does relative to the dollar is kind of a little confusing sometimes. I don't think that I can confidently say that the dollar is selling, so we should see the treasuries buy or whatnot. The Japanese yen is net up though. That's for sure. Scratch. Damn. That one was looking really good for a moment too, didn't it? How much did I get? Well, I got 9 favorable. I think both of those were supposed to be small trades. I'm kind of thinking about, do I have leeway to take more trades today? No, I'm not sure if in this location it makes sense to be trying to make a call on this. I'm kind of suspect that we may be stuck in this area. White House seeks to pull McConnell into debt talks. Why? You can't do anything. They must think that McConnell will champion a clean debt ceiling increase. I'm kind of wondering, when I took that trade, I felt like we were higher up here. So I think I was a little... I think my bearings are off a little bit. I only see you in the Canadian trader trade bonds. He seems to have gone off on a prop firm marketing spree, though. Really? I was thinking about this the other day because, like, you know, you make a certain amount of money from the advertising on YouTube. And let's say that I was like 10 times more popular than I am now. You know, that still wouldn't be enough to like pay all of the bills. So my guess is for most of these YouTubers that if they want to supplement their income with just the YouTube side of things, not the trading factoring into it at all, they probably need more than just the YouTube advertising, right? And yeah, so you would want to do something to supplement your income. And it seems to me like the thing that you would probably be able to get the most, like I'm firmly against marketing for the prop firms, but I'm gonna bet you that there's probably more money in affiliate stuff from prop firms than there is anything else. Okay, so where did I get scared out at again? 371. Oh my god, guys, this is so terrible. So I was thinking about that trade because I think it was a little bit more of a short-term technical trade that I was trying to make. I really should have been a little bit more aggressive about taking the profits when I had it. And maybe been a little, you know, I don't know. I don't really like holding on the risk and increasing the risk, but that was a situation where if I was willing to have just sat through the heat instead of scratching it, that I would be back up to where I was, you know. But does that justify me because sometimes it makes me feel like, oh, okay, so we really are going down. I want to get back in now, right? But no, I don't think that's the case, because again, the problem that I was saying is that we might be stuck in this area. It kind of looks like they have formed a hole here. So, would you take longer term market plays and futures if there was an opportunity? I think that maybe I would be willing to take long-term plays in treasuries if there was an opportunity, if we're talking about like 6-month kind of trades. But like a week to a month sort of a trades, I've had a real hard time trying to get that stuff to work yet. If I was going to do those sorts of trades, I think that it would be more of a CTA strategy. Just as an example, I got caught a pretty good winner on Monday. And part of me said, oh yeah, we can just sit and ride this, right? But if I had held it, the next day I would have come in and I would have seen all those profits gone, right? So I did not expect that move to almost immediately retrace like that. That was a big surprise to me. That would have been a really frustrating play if I was trying to swing it. Okay, so I'm still in like I really want to watch market closely mode, and I need to get into, yeah, this isn't a good time. We need to disconnect myself from it a little bit. I'm still thinking about Nemesis's comment, because I think it was yesterday somebody was trying to, they wanted to post affiliate links, and I'm like, no. No affiliate links for prop firms. I mean, the larger thing is that I just don't think that the prop firm is appropriate for most traders. I mean, it makes sense. You come in, I'm doing the prop firm, you're all doing the prop firm, we're all doing the same prop firm or something like that. Like, I think that sort of a setup with a YouTube channel would work very, very well. But I would rather people trade their own accounts. I would rather be, I'm trading my own account, you're trading your own account. Let's do it together. We don't need prop firms. They're not appropriate for most traders, and they encourage you to take on too much risk, in my opinion. That would be 10. I'm really frustrated because I really could have held that. I think if I had held that, I wouldn't have gotten any adverse excursion. So in the end, it's kind of like, doesn't matter. It would have just washed out that loss, but oh well. And the issue is still like, it doesn't necessarily cancel out the downside. I mean, if this fails and goes down to like 23, which I'm not expecting, but if it did, then I would definitely be like, oh man, that could have been a great trade. But no, I think that I missed the opportunity, and I probably am done until the Fed meeting at least. But my take is still, I'm very concerned that the PMI prices continue to be high. And at the moment, I am concerned about sticky inflation. One of the things that I saw, so somebody in Discord was suggesting that this would be a really, really dovish Federal Reserve meeting. I don't think you're going to see a Federal Reserve turn very, very dovish. I think that they'll say, yeah, we'll hold rates here, but the whole time they're going to be threatening that we'll move rates higher if we have to. Because the concern, the thing that they have to be worried about right now is that inflation comes back with vengeance, right? So being too dovish could cause that to happen. I think they're going to avoid doing that. But that's not, stopping the treasuries from selling. I should say, though, I'm not seeing this downside accompanied by low in the 10-year. Once again, it's like it's being driven mostly by the 5. Well, so live action, I don't think that the Federal Reserve is going to say anything too significant. But I still think that today may be good for a long in the treasuries, because I think that, if the Federal Reserve comes out and tries not to say anything significant, that the market will read it as dovish and buy, right? Super high risk, though. You don't know what he's going to say, If you ask Jerome Powell if we would be up or down today, he would not know, right? Because he has the ability to say, well, I'm going to be hawkish or I'm going to be dovish. So in some situations, he could maybe tell you whether the market's going to be up or down. But I think that today he's probably thinking, I'm not going to say anything that is intended to move the markets, but the market's probably going to move and misinterpret something that I say anyways. Right? I mean, that's the way that it's been playing out the last 4 or 5 Fed meetings. So okay, we did come back to that 27.5 again. Going for broke? Oh. Hmm. I mean, if your intention is to hold until the Federal Reserve meeting. This just goes back to I'm frustrated because I took one that was intended to be a small trade and it went against me real fast. So got out of that. Okay, cool. And I counted another one that would have wiped that out, and I wasn't able to catch the profit. You know, I put an order out 2 or 3 times looking for a fill, or at least testing the market, and I never got fills. That maybe should have been a warning that I needed to be more aggressive, but yeah. Do you use VIX for sentiment? So I don't actively watch the VIX while I'm trading because I don't get data for that, but I definitely keep an eye on what it's doing from day to day. Doesn't affect me as much. Still sitting there, although the inside liquidity is not bad. There's a big order there at 28.5. That's new. And there's the one at 31. What is the bid ask snapshot in the DOM? Okay, so when it ticks up, what it does is it says, since we've ticked up, how much has that bid or ask changed? So like if we tick up, oh geez, look at that. So let's say that we ticked up and then this order at 31 just suddenly canceled. That would be kind of a weird thing to happen, right? Then you would see negative 1,000 in your snapshot column. Yeah, no problem. That was a simple question. Well, that was a really strong buy impulse that came through. There's a bit of offer side liquidity above us. That buy kind of came through like out of nowhere. It was all mostly in the 10-year. Sorry, it was mostly in ZN. I don't know if that's one that I should play. I'm still concerned about us being stuck in a rut. Okay. How do I feel about this? I think part of me is just reluctant to do anything because it just got whipsawed around there a little bit. There we are seeing some buying. I'm very reluctant to go along with it. There is an iceberg there at 30. This would have been really great for doing our, our sim market making orders. Catching the spread there, and probably would have built ourselves up quite a bit of room for us if whichever way we wanted it to go. It is to the long. I mean, I would rather be long treasuries overall here at this point. I don't know if 337 is a great price, but I'm gonna come back to Zero Hedge to see if there's anything about the services PMI that I missed. Drunken Miller on America's debt crisis is like watching a horror movie unfold. Shit. Despite hard data disappointment, soft survey data for manufacturing showed an improvement in April, and analysts expected the services sector to do the same with modest gains. Under the hood, ISM data shows a rebound in export orders, slowing in employment, and prices sticky, up from last month marginally. Yeah, marginally. It was a little bit up. I would have expected it to have come down quite a bit though. Chris Williamson, chief business economist at S&P Global Market Intelligence, said April saw an encouraging acceleration of service sector growth, which, combined with indications of a renewed upturn in manufacturing, suggests the economy has regained some momentum at the start of the second quarter. Companies have reported an improvement in confidence compared to the gloomier picture seen late last year, with service sector companies also benefiting from a post-pandemic tailwind of spending shifting from goods to services, notably among consumers. However, there are indications that resurgent demand for services is reigniting inflationary pressures. Average rates charged for services are now rising at the sharpest rate for 8 months as firms report a greater ability to pass increased costs on to customers. This upturn in the service sector selling price gauge hints at a concerningly stubborn stickiness of core inflation. Finally, Williamson pours some serious cold water on the hope narrative. Much, of course, depends on whether this recovery in demand can persist. Headwinds from higher interest rates and the increased costs of living, combined with the winding down of household savings, suggests the upturn could lose steam in the months ahead. S&P Global US Composite PMI posted 53.4 in April, up from 52.3, to signal a solid upturn in private sector business activity. The faster expansion in output reflected quicker increases in activity at manufacturing and service sector firms. The rate of growth was the sharpest since May 2022, Price pressures regained momentum in April as input costs and output charges rose at sharper rates. The acceleration in inflation was broad-based, with service sector firms registering the faster upticks in both costs and charges. And while I read that, two ticks up, but kind of quiet ones. 30-year at its high sell. I guess 3.7 wouldn't have been too bad. It looks like we've got people executing both sides here, man. I think one side is going to win. There could be like some real opportunity in it, but I don't think that we have enough information to predict which flow is going to win through here. For the moment, the buyers have the advantage. Steve Leisman reports Goldman boosts April payroll forecast by 25K to 250K in wake of ADP. This morning's ADP report adds to the evidence from other big data sources that the underlying pace of hiring remains solid or strong in April. UKG was also stronger. Man, that is not what I've been seeing, but you know, I'm in tech, so. With the Fed meeting and not sure if they're willing to push as much more. I don't know, man. Somebody's definitely buying it. So there's two sides to this, but it looks like the buyer is bigger by about a little less than 10,000 contracts so far. And by the way, you know, we had noted at one point that there was some liquidity in through here, but that seems to have pulled or moved up. And you got these points. I wouldn't say that this is like a super predictive thing, but it is something that you'll see on strong trends. You just kind of got these like targets up above you, just like scream at you. Feel like you know, when we were at 337 and I was like, man, I'm not gonna take it. I guess I could have done something there, but the risk is still okay. We're on the higher end of this and it reverts back again. I'm not saying that's the likely scenario, just that's the risk. I think this action is definitely interesting. I mean, I don't think that it would be too big of a leap for them to start pushing those highs again, right? And then it would be game on. Carl Quintilla, the falls in global agricultural commodity prices, energy prices, and wage growth will soon drag down food CPI inflation from a 46-year high of 19.6% to around 4.5% by the end of the year. Food inflation will soon become a drag on overall CPI, says the UK. Spoos, are they gonna... They're kind of looking like they're peering down the edge right now. Think they're thinking about jumping. I need to keep myself talking. I'm gonna go fall asleep. I think that means that I didn't get the high. I didn't get the high from the trade, and so it's making me sleepy. That's it. That's what it's all about. Man, I keep looking at that and going like, ah, they're gonna make it to that high. I don't know why I feel that way. Logically, I don't feel that way. Logically, I think that it's going to flip back around here. And just continue to frustrate. How's a strong uptick? Good bid. Market orders hitting into it real quick. It's kind of a little impulsive, but... And they didn't clear the L1, but it's definitely there. Okay, and then they're clear. Bid's not super strong, but it's there. Holds, yeah. Now it flips. That's pretty strong trend in looking action there. A 1/2. My throat's kind of feeling it, even though I don't think I'm sick. I think it's just allergies. My eyes are still watering. I don't feel very good. I don't feel like sick or anything, but I'm not at my top. Okay, iceberg at 1/2. I don't know. If they do break the high, it'll be really interesting because there is a lot of liquidity up there. There's definitely liquidity up there. You know what? The 6J has kind of been moving us too, so totally could continue the trend. I would think that a trend continuing through in the 6J would outweigh any of that and would push through. And there's the 30-year taking it. This is one where I might be able to do like one of these sorts of things. Actually, why not right here? Okay. Shake it out there, man. Keep myself awake. Even putting on a sim trade not keeping me awake. Well, it's not like I slept badly yesterday or anything. I think my chemicals are messed up from taking a lot, losing trade. Okay. Relatively thick on both sides here now. I don't think that calling out your trades are rude. As long as the thing that it bothers me is when people start calling out trades with as like, I want people to follow me sort of a thing, right? I hate that. I would much rather hear about why people are getting in trades, but the reasons that you might have gotten in trades might be things that I don't care about, right? Okay. Looks like that's a new high. It is doing, I'd say that this latest trend up here is better than I thought it would be. I don't know. So what do you guys think? Do you think that I was a little bit too cautious, I guess? I think the thing was in the beginning I was taking some trades that maybe didn't make necessarily weren't super great trades, but I thought I could get a little bit. I wouldn't say that they were terrible trades, but it didn't end up working out for me, and in the end I lost like $10 or 13. I lost $13, right? So then I saw an opportunity. I was like, well, you know, if I was going to go long treasury short rates, here's a great opportunity, 337, right? I don't know if I like that price. And I didn't like that I had already taken a loss, so I just kind of stayed out of it. And now that turns out to have been a really great trade. So did I you know, well, I guess you could say that I did the right thing, but I don't know if it was, I'm not sure if I was doing the thing that I should have based on what I knew at the time or not, you know? I guess I find that like posting trades is like useful for yourself, maybe, but so I get like the thing that pisses me off is when people come in, they're like, oh, I have this foolproof strategy, watch, I'm going to show you all, and then they come and they start taking the trades, and I'm like, no, it's randomness and you just don't realize it. You know, I don't like it when people do that, right? Because the reason that they're posting it is to puff themselves up and to try and convince other people to trade that way, and you know, I would much rather see people post like why they're taking the trades and whatnot. And if it's like you're trying to help me, then like saying that you got into a trade does not help me. Right? Like if I see somebody and they got in a trade, especially if I think that they got off of a trade off of some sort of technical analysis signal that they think that they've got, then I am going to actively not take that. So you saying it actually makes me less likely to do something. Right? Uzi might be an exception. I feel like when Uzi says stuff, it does kind of affect me. You know, I get down there and then I see Uzi is like entering in a position on a reversal. I'm kind of like, maybe now's a good time to get out. I came back there, man. That's kind of suggesting to me that the opportunity is already passed. Man, this is tough. Like if I had, I mean, I could have gotten 338 at one point. I don't think there's any way I would have taken that. And maybe if I had stayed out of those first two trades, and I don't know. I still don't think I would have taken 338. But maybe 337. Okay, so then you get 20 bucks. So now I'm sitting here waiting for a fill on 20 buck winner. But like that's coming back hard. So I'd have to take 15 or 10. So I would probably still be frustrated with where my profits are going on this, unless I'm really gonna like stick it out until the FOMC or something like that, right? Did that not fill? What happened there? Hold on a second. Oh, okay. I had one more. Crap, I missed a good spot in line there. And somebody's trying to spam me on my phone. There we go. Anyways, to what we were saying earlier. Now, on the other hand, if you come in and you say, well, I think that we're going to see buying flows today because of X, Y, and Z, and then I'm like, oh yeah, that's like a good point. I was thinking about those things too, and then I might be more likely to take a trade off of it. Sorry, my voice is a little gravelly today. I wonder how much the allergies affects me. I mean, that's probably being too, what's the word? That's probably being too much of a hypochondriac, but you know, it could be affecting me. I don't feel like I'm performing as well today as I should be. Why do you choose NinjaTrader over Sierra charts? Well, so I think number one, that like their charting overall is a little bit better than Sierra charts, and but mostly NinjaTrader has the best ecosystem. Like it's really easy to come in and build like order flow indicators in NinjaTrader, and there's lots and lots of options. It is like 10 times harder to do it in Sierra charts. And many of the ones that I've seen when I've gone into the code, they weren't actually produced very well either. So like it's not only is it harder to make it, but it's easier to like screw it up when you make it. And I also kind of feel like that Sierra charts is mostly just stealing innovations from other people, and I don't like getting together with developers that do that, because those kinds of developers tend to give you messy messy software. Like Sierra charts is a great example. Like the interface for it is a freaking nightmare. Like finding settings for it, it's crazy, because there's not somebody that's like has a well thought out view of like the markets and how trading should happen. It's some business guy that says, hey, these guys did this, so we need to do this, and then they smash it in there somehow, and the developer makes it happen, right? And there's certain big disadvantages to having a developer like that, right? Like that guy isn't going to think twice about screwing you over if it's in his interest to do so. Now the defense of that is that NinjaTrader has kind of started to become that now too, because they have their own brokerage, and I haven't been too happy about NinjaTrader since they started the clearing firm. That's why I would still say that the platform that I really recommend is Jigsaw. And, I think that Jigsaw is better than Sierra charts in almost every way. So, not that Sierra charts is a terrible pick, So really, we're kind of like, when we're talking about platforms, we're really kind of arguing about pretty minute details, because the space is just very competitive overall. The Economist says most people on antidepressants don't need them. That's an interesting take. Is there that many people on antidepressants? I don't know. So I kind of want to just be out of this. So I'm just going to take the prop because I got to go. That's the only reason I'm taking this. I still think there's a good chance I could get 0.5. But come on, 24. Just give it to me. Thank you. Okay, guys. It's a rough, but you know what? We have an FOMC, and there's going to be plenty more opportunities today if we want to do something. So, yes, we did talk about the Carl Icahn thing earlier today. That story is so interesting. Wow, you should see the stats on white women 45. Antidepressants are basically their food. Yeah, I'll be back 5 minutes before the FOMC announcement. So, I'll catch you guys later. In the meantime, stay excellent, team.